paycheck up to 2 days early with direct deposit. It's banking the way it should be.
Start banking with Chime today at Chime.com.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Between game-winning shots and walk-off home runs.
Pitch. Swinging a line drive, slice down the right field line toward the corner. Looking up, and this one is gone!
Follow TuneIn on social media to stay in the game. From live reminders of the biggest games in every league, to stat pick recommendations of our favorite sports shows and podcasts.
Yeah, but you're really greedy, Dak, but nobody's thinking that yet.
You know how these contracts work. All that 40 years for 5 years for $200 million.
Follow at TuneIn on Facebook, Twitter, and Instagram to hear more sports.
Flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
A hard 20 after a hard day isn't for everyone.
Got this, Peloton.
Waking up before the sun isn't for everyone.
You're almost there. Stay with me.
This isn't for everyone.
Peloton, let's go.
But at $58 a month,
Don't give up. Come on.
Peloton is for anyone who wants it.
Think you need to buy expensive skincare products to see dramatic results? Try Olay Skincare. Just 1 jar of microsculpting cream has the hydrating power of 5 jars of a prestige cream, which helps plump skin cells and visibly smooth wrinkles, while new Olay Retinol 24 provides visibly smoother, brighter skin. For dramatic skincare results, try Olay and now receive 25% off your purchase at Olay.com. Brand power helping you buy better.
I've pulled your credit and I've got some bad news. We're going to pass on that loan.
What? You just said a second ago I was fine.
Oh, yeah. That was before we saw all the negative items on there.
Wait. Negative items? That doesn't sound right.
You know, it's like they say, bad credit is forever.
That sounds made up. Kind of like these items on my credit.
Well, just because you haven't heard of it doesn't mean they don't say it.
They say a lot of things about credit. We say enough is enough. Try something new, starting with a free credit evaluation from creditrepair.com.
You want a fresh-smelling home, but some air fresheners use heavy, overwhelming scents. Try Febreze One, a range of innovative air fresheners with no heavy perfumes that you can feel good about using in your home to deliver a light, natural-smelling freshness. Febreze One neutralizes stale, stuffy odors and releases a subtle hint of fragrance, like bamboo or lavender and eucalyptus. To eliminate odors with no heavy perfumes, try Febreze One. Brand power helping you buy better.
That tune-in lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Goes out. You have no lights, no refrigeration, no heating or air conditioning. Your well or sump pump won't work. Your modern daily electronics are rendered useless. And what if the power's out for days or weeks? Are you prepared? You can be with a Generac home standby generator.
24 days we were without power. I had water, I had ice, I had coffee, I had air conditioner. I was able to stay here because of Generac.
When an outage occurs, your Generac home standby generator automatically powers up, so your life goes on without disruption. You and your family are comfortable, safe, and secure. Generac generators run on your home's existing natural gas or propane. And Generac's standard Mobile Link remote monitoring system keeps you posted on operating status, maintenance updates, and more. Generac generators are designed, engineered, and purpose-built in the USA. Generac is the #1 manufacturer of home standby generators in the world. 8 out of 10 home generators are Generac, with thousands of satisfied customers.
Very good product. Very, very good reviews from everybody.
Prices start at just $19.99, and special financing is available with surprisingly affordable monthly payments. Call now to schedule your free in-home assessment with one of Generac's 6,000 nationwide dealers. The call is free, the assessment is free, and there's no obligation to buy. Plus, if you act now, you'll receive a 7-year extended warranty absolutely free. That's a $695 value. Call now, so the next time there's a power outage, your home powers up. Power your life with Generac. Call or go online to schedule your free in-home assessment today.
Did you know that feeling sluggish or weighed down could be signs that your digestive system isn't working at its best? Taking Metamucil every day can help. Metamucil supports your daily digestive health using a special plant-based fiber called psyllium. Psyllium works by forming a gel in your digestive system to trap and remove the waste that weighs you down. Metamucil's gelling action also helps to lower cholesterol and slows sugar absorption to promote healthy blood sugar levels. So start feeling lighter and more energetic by taking Metamucil every day.
Banking with Chime is very easy. I feel like I can finally trust my bank. There are no monthly fees. I get paid early. I always have peace of mind that my money is in the right place and in good hands.
Start banking with Chime today at Chime.com.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Banking with Chime is honestly one of the greatest things that's ever happened to me financially. Not waking up to hidden fees or miscellaneous charges. My name is Tibian and I love banking with Chime.
Start banking with Chime today at Chime.com.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
I'm paying twice.
Better call Sean.
Did you walk by the pile of garbage in the backyard?
Not my problem.
There's about a foot of water upstairs.
I don't give a
The Deep, Chicago. All new Wednesday, 10 Eastern. CNBC. Get yours.
Are you one of the millions of women embarrassed by hair loss or suffering from thinning hair?
I didn't want to be judged because I was losing my hair.
Welcome to Hair Club.
Just really one of the best decisions I've ever made.
I feel like me again. I have my dream hair back. I'm glad I chose Hair Club.
We offer a wide range of hair loss solutions created and designed especially for women, especially for you. Each proven solution is backed by our commitment to satisfaction guarantee. Call or go online for more details.
I feel so sexy with my hair.
When I leave my house, I'm not thinking, oh, how does my hair look? I know it looks good.
I love getting the compliments. I think that's my favorite part because I never got those before.
From sucker moms to celebrities, thanks to our world-class hairstylists, colorists, and trained hair professionals, it's no wonder Hair Club is the trusted hair loss solutions provider in North America. We offer all proven surgical, non-surgical, and hair regrowth solutions for you and any woman suffering from hair thinning and hair loss.
I trust Hair Club 1,000%. It's plain and simple. I mean, look, the results speak for themselves.
Call now to get your free hair loss guide. It will tell you what you need to know about your hair loss problem, what your options are, and it's free when you call now.
I just showed everybody what my hair looked like, and I got nothing but positive feedback, and that I was an inspiration for other people. It just made it okay to do something about it.
Call now to schedule your no-obligation complimentary consultation. At your appointment, you'll get a free comprehensive hair and scalp analysis. And as our gift to you, when you come in for your consultation, you'll even receive a set of free hair care products especially formulated for women with thinning hair. Call or go online now. Don't wait another moment for that beautiful hair you've always wanted.
My life is so much better since Hair Club.
Call now.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
When you take Align, you have the support of a probiotic and the gastroenterologist who developed it.
Align helps to soothe your occasional digestive upsets 24/7 with a strain of bacteria you can't get anywhere else.
You could say Align puts the pro in probiotic. So where you go, the pro goes.
Go with Align, the pros in digestive health. And try Align gummies with prebiotics and probiotics to help support digestive health.
Do you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Get yours.
Hi, Phil Swift here. People everywhere tell me how much they love the Flex Seal family of products.
This stuff is awesome. It really works.
Nothing compares to the original strength of Flex Seal. Flex Seal Liquid, Flex Shot, Flex Tape, Flex Glue, and Flex Paste. Use the Flex Seal family of products to weatherproof and protect virtually everything. Even make quick repairs underwater to help prevent flood damage. Seal up large cracks and holes to keep those nasty pests out of your home. All Flex Seal products create a super strong watertight barrier. Patch busted pipes, seal gushing gutters. Now you can coat, patch, seal, and repair. And don't forget about our portable Flex Seal Minis, perfect for quick repairs on the go. Imagine everything you could do with the Flex Seal family of products. Available at these fine retailers.
Hey, our workers' comp insurance is expiring. Should I just renew it?
Yeah, sure. Hey there, small business owner. Pi Insurance here with some sweet advice to stop you from overpaying on workers' comp. Try Pi instead and save up to 30%. 30%? Really? Sure. Get a quote in 3 minutes at easyaspie.com.
That is easy.
So, need another reminder?
No, I'm good. Reminder for what?
Oh, yeah. Need workers' comp insurance? Get a quote in 3 minutes at easyaspie.com.
When I started Cobra Kai, the lack of control over my business made me a little intense. But now it helps me get paid, manage cash flow, and run payroll. And now I'm back on top with Koala Kai.
Save over 40 hours a month with Intuit QuickBooks.
I created Hint Water to make water taste better. We started in one grocery store. Now we're online and everywhere. And we couldn't have done it without NetSuite.
NetSuite is the world's #1 cloud business system. Schedule your free product tour right now at netsuite.com/grow.
My favorite thing about banking with Chime is getting my paycheck up to 2 days early, which is really cool because I walk into the office and I'm already boasting that I got paid. My name is Dulce and I love banking with Chime.
Get paid up to 2 days early. Chime.com.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Are those your bank fees?
Yeah, first there's the overdraft, and then the maintenance fee, which I don't know what they maintain.
You should start banking with Chime. There are no hidden fees, and I get paid up to 2 days early with direct deposit. It's super easy.
Start banking with Chime today at Chime.com.
The Profit, an inside look. All new tomorrow, 10 Eastern.
rooms I've ever seen. I mean, I'm a huge fan of this. Oh, rooms I've ever seen. I mean, I'm a huge fan of this. Oh, this is incredible. Thank you.
Tonight, starting at 8 Eastern. CNBC, get yours.
I'm in over my head.
Wednesday.
I now have a rehab consultant.
A what? Did you walk by the pile of garbage in the backyard?
Not my problem.
The Deed, Chicago. All new Wednesday, 10 Eastern. CNBC, get yours.
Breaking news, futures plunging, hitting limit down, been locked there all night, even as the Federal Reserve slashes rates in an attempt to stave off a recession in the face of the global coronavirus threat.
State of emergency. The federal government, states, and cities across the country take unprecedented steps, putting millions of Americans effectively in quarantine.
Now, myself personally, I wouldn't go to a restaurant. I just wouldn't.
And strong words from NIH Director Anthony Fauci as the CDC calls for even stronger steps to contain the COVID-19 outbreak. It is Monday, March 16th, 2020, and you're watching a special edition of Squawk Box.
Good morning, everybody. I'm Becky Quick here at CNBC headquarters. Joe Kernan and Andrew Ross Sorkin are live at the NASDAQ market site in Times Square, and we are watching what's happening with the markets today. Take a look right now. You're going to see the U.S. equity futures hitting limit down after dropping 5%. You're going to see the Dow futures, again, the S&P futures, the NASDAQ across the board. All of these measures limit down after we've seen what the Fed's reaction has been and wait for the markets to open today. Once again, we're going to watch the ETFs that track the major indexes. Those are not capped at 5% down, so you can see a little bit better what the action would be. And right now, the Dow ETF is trading down by 8.9%. S&P 500 ETF is trading down by 8.8%. So these are the things that you're watching very closely. Last night, the Fed took emergency action, cutting its benchmark interest rate by 1% to near zero. It also announced other moves in an attempt to try and stabilize the markets, including buying $700 billion in Treasury and mortgage-backed securities. The Fed and 5 other central banks also are activating swap lines. The goal here is to try and calm disruptions in overseas dollar-funded markets. More from Steve Leisman in just a moment. And some other news out of Washington today, the House passing emergency coronavirus aid legislation, including free testing and paid sick leave. The Senate is expected to pass the bill this week. Treasury yields this morning. Take a look right now. You'll see the 10-year is trading at 0.8%, the 2-year at 0.336%. And then if you watch oil prices this morning, too, you'll see that at this point, it looks like energy prices, WTI, down another 5%, trading just above $30 a barrel at $30.14. Andrew.
Thank you, Becky. This is becoming an historic moment. There are now more than 153,000 confirmed coronavirus cases globally, with more than 3,000 now right here in the United States. The U.S. death toll is at least 61. Cities and states are taking action across the country to encourage social distancing. Right here in New York City, the city is closing all public schools and limiting restaurants, bars, and cafes to serve only takeout and delivery. Nightclubs, movie theaters, small theater houses, and concert venues have all been ordered to close starting tomorrow at 9 a.m. local time. Retailers are also closing. Apple saying it's shutting all of its stores outside of Greater China until March 27th to reduce the risk of the virus spreading. Its online store and app store do remain open, but what's taking place in New York, dare I say, is likely going to be coming to other parts of the country very soon if they're not there already, and the economic impact is real, Joe.
And de Blasio resisted for like 10 hours or whatever, said he wasn't going to close the school. What are these? It's going to be closed till at least 4 weeks, probably 6 weeks.
The big debate here in the city, and this is the debate that's happening around the country in terms of all the different municipalities, is so many of these schools provide food for children, also effectively provide child care, especially for healthcare workers. And so there's a huge issue, which is to say that if kids are going to stay home, the healthcare workers that may be needed most, the food and other services that these schools provide, how do you do that? One of the things that the state of New York is going to be doing is going to be opening up some of these schools to be used effectively to provide food and other child care services. They're working on that. But this is an issue not just here in New York, but across the country as people try to move to model similarly after doing this.
Just on a less, just looking at the daily lives of so many people, their kids are going to be around. You got 2, 3, 4 kids that are young. You've got a job. What the heck are you going to? I mean, I know you're talking about the healthcare world, but just in general, life is going to be topsy-turvy.
Plus, you're not doing anything. You're cooking every meal at home. You've got to make sure that you are teaching for all your kids, because essentially, if you've got a young kid, it's your job to then be sitting there teaching them the things they should have been doing all day.
This is all about bending the curve. We got to try and bend the curve so we don't get overwhelmed at this point. Our healthcare system, and we got to protect the people that are taking care of all the vulnerable people, of which there are many. Stocks dropping sharply in Asia overnight. Europe opening in the red, as you can imagine. We have global coverage of the markets. Jeff Cutmore standing by in London. Let's begin with Matt Taylor, though, in Singapore. Hey, Matt.
Hi there, guys. A really negative session right across Asia. The markets not reacting positively to the Fed easing and the drop that we're seeing in US futures. But we also got some woeful data points out of China as well. Industrial production and retail sales for January and February plunging sharply. Industrial output down 13.5% on year. Retail sales down by 20.5%. These missed the expectations by a mile. You can see this is the picture across Asia. The China market closing down by about 3.4%, but a whole lot of easing out of the Asia Pacific as well. New Zealand, you can see the market here down by 3.5%, cutting 75 basis points just before we got that Fed announcement. In the last hour, South Korea, the Bank of Korea, holding an emergency meeting. We saw an interest rate cut there of 50 basis points to a record low 0.75%. This coming after the market closed though, so 3.19% was the weaker side down that we saw for the Kospi. Japan markets, a choppy session, turning positive after we had the BOJ with its emergency meeting. We saw further easing there, the central bank announcing a doubling in the size of ETF purchases, but Japan closed down by about 2.5%. The worst performer, Australia, the S&P ASX 200 logging its worst session ever, down 9.7%. A lot of selling into the close. You can see here the market really well and truly falling off the cliff at the end of the day. Guys, back to you.
Great, thanks. Let's get to Jeff Cutmore now. Jeff is in London. Hey, Jeff.
Hey, good morning, Joe. We've been open about an hour or so here in European markets, and we've ultimately just seen accelerating losses to the downside. And if we just show you where we are at the moment, the Stocks Europe 600, that major blue chip index here in Europe, is down around 8.5% at this point. And if we take a look at how that breaks down in terms of the markets across Europe, you can see that most of these indices are off in excess of 7 to 8%, with the CAC actually down the most, off just shy of that 10% mark. One of the problems we've got here is that the epicenter has now shifted from Asia to Europe for coronavirus. And so governments at the moment are coming out with policy statements almost by the hour. And we are waiting for an update from the UK, which appears largely to have taken a slightly different approach to the way it's managed this virus, but now seems to be falling into line with a lot of other countries that have pursued the self-isolation route and quarantine. So developing stories still here with the treatment of the virus, and the markets, of course, very unsettled by the coordinated central bank moves. And just briefly, I'll show you what that means in sector terms here. And if I step back, you can see healthcare doing the best, only down a little over 6%, and travel and leisure and financial services taking it on the chin, off over 15% and 11% respectively. So a very weak session here. And if the central bank's aim was to stabilize confidence among investors, well, all they seem to have done is spooked it as far as these European bourses are concerned. Back to you guys.
Hey, thank you for that. I want to get now back to the Fed and the central bank emergency action, historic action being taken last night by Jay Powell. Steve Leisman joins us this morning with the full story. Steve.
Morning, Andrew. You remember the financial crisis when these programs like the Fed rolled out on Sunday were rolled out, but rolled out over a series of months. This was amazingly historic because the Fed rolled out all these programs all together. Let me go through them. One, it cut rates to 0, a full percentage point. Two, it $700 billion of purchases that it said was to make markets function more smoothly, but I guess you could call it quantitative easing. $500 billion to treasuries, $200 billion to mortgage-backed securities. And then also offered really strong forward guidance that the Fed was going to keep rates at 0 until it's confident that the economy has weathered recent events and is on track to achieve maximum employment and price stability. Brought bank reserve requirements down to 0. Opened the discount window for 90 days. Usually loans are just a couple weeks, and it slashed the rates and did that coordinated action with other central banks when it came to the existing dollar swap lines. Again, lowered the rate, lengthened the term out. All of this principally aimed for the moment at getting the Treasury market working, but also to try to alleviate some of the economic impact of the virus, such as it is. Here's Jay Powell, who yesterday called an emergency press conference after the Fed met in the afternoon on Sunday.
The actions we have announced today will help American families and businesses, and indeed our entire economy, weather this difficult period, and will foster a more vigorous return to normal once the disruptions from the coronavirus abate. We will continue to closely monitor economic and financial developments and their implications for the economic outlook.
So I think the question of the morning is going to be, why did it have such a negative effect? I talked to some principals in the Treasury market yesterday, and they thought that what the Fed did could be sufficient to bring down some of those spreads that were out there. I think, though, that nothing is going to address really the principal issues, which is the idea of what's going to happen to the economy. I asked Powell whether this meant a recession, and he said certainly a weak second quarter, but the virus numbers would tell us whether or not it goes beyond the second quarter. Andrew?
Steve, here's the real question, and we also heard Steve Mnuchin yesterday suggesting that he did not believe there was a recession. You can only hope that's the case. I spent the weekend literally on the phone with CEOs and government leaders and big investors trying to ascertain, all of whom are doing their own scenario planning, much of which is worst case scenario planning. And even if this goes on for 3 months, which I think is not an unreasonable timeline, given what we've seen elsewhere and how it appears we are behind, the question is how many businesses ultimately go out of business? Meaning what kind of, talk about government help, what kind of large-scale government, call it a bridge loan, would have to be required? Because even though we keep talking about the potential for a quick bounce back once, in fact, this virus is over, there are so many small businesses, some of which I talked to, that maybe that got funding pulled literally over the weekend. And that's something that I'm not sure the Fed can help with.
No, it's not. That's the fiscal policy side. Look, what happened last week was quite remarkable. I began Monday talking to people about problems in the Treasury market. By Wednesday, senior executives were telling me the Treasury market is broken. By Friday, the Fed had come in strong. By Friday afternoon, the President of the administration and Congress had laid out, serious fiscal plans for addressing this. The transformation of what we think this virus is going to be in America changed dramatically last week. I don't know if the Fed action over the weekend put an exclamation point on that or somehow eased the concern, but certainly the idea that we were going to escape what's been happening in Italy or elsewhere in the world, I think became pretty clear that we're not going to. And when concerts were canceled and sporting events were canceled, and now they're talking about closing bars and things like that, the worst case economic scenarios have now become but that's what I wanted to ask you about.
In terms of what you think the Fed can do, what you think the Treasury can do, what you think they may or may not be able to do in tandem. I mean, if you start to think about businesses, both large and small, whether it's Starbucks, which is going to be doing, drive-through and whatnot, or McDonald's doing drive-through, to the point where, by the way, some of these places may ultimately have to shut down, at least temporarily. And when I say temporarily, it could be 2 or 3 months, potentially longer. These are a lot of these franchise businesses, Dunkin' Donuts, McDonald's. Look, these are franchisees.
Andrew, neither the Federal Reserve nor the federal government can stop a hurricane or a flood from coming. All they can do is address the aftermath of it. The Fed's job number one right now, I'm pretty sure the thing that keeps them up most at night is getting the Treasury market working. There have been big gaps out there. That's going to be the absolute key. I think he's put in place, with lowering rates to zero, with doing additional quantitative easing, with some of these programs, what you might want to be there for the aftermath. But let me just make one thing real clear here. Everything that fiscal policy and monetary policy would do, which is to increase economic activity, is at odds with what the health professionals are saying we should do, which is to decrease economic activity.
Correct.
Okay? So all they can do right now is address the aftermath and try to ease what the process of getting there. But if anybody's looking to the Fed to stop the virus, they're looking in the wrong place.
Get used to saying the term necessary but not sufficient, because that's what everything is going to be necessary. But
precisely, Joe. That's right. And I don't know if you look at what the reaction on the market and say the Fed failed here. I'm looking at what it did, and I'm thinking, what else could it have done? There are a few other things that are out there, and I think the Fed may yet do additional measures. We'll wait to see how markets behave, how markets perform.
Steve, let me
at this point, I think it's done what's needed.
When you say we're going to wait to see how markets perform, we know how the equity markets are going to perform, at least at the open. We're a limit down.
Yeah.
What should we be watching in the Treasury market? Because if we're trading just under 0.8...
There's things like there's a basis trade where you borrow in dollars and lend in yen. That has blown out. There's other things in the derivatives market, treasuries to derivatives. The Treasury market cash market to the futures market. I have to get on the phone. I did not have a chance before this hit and talk to guys who are doing that trading. There was one particular derivative last night that's very important that traded down. It was up over 200 basis points wide. It traded down after the Fed to 175. It normally should be 25 basis points. There's off-the-run treasuries that we need to watch to see once the Fed comes in. The Fed's going to do $40 billion this morning of purchases. Let's see how that works through.
In other words, these boards we're watching are not going to show us.
They're not going to show you the performance of the Treasury market. They may reflect it if the Treasury market were to come in a little bit and start performing better. But the key is to watch what the Fed does here this morning and the effect of it on the Treasury markets. And we're going to have to report that. You can't really see it on the screen so much.
Great. Get on the phone, come back, report back, all right?
Will do. Thanks.
Steve, thank you. We've got a lot more from Steve throughout the show, but joining us right now is Patrick Armstrong. He is Chief Investment Officer at Plurimi Investment Managers. And Patrick, what are you thinking this morning?
Well, no one's got the answer right now, but what we've been doing is one thing that you're getting paid a lot for is volatility. So last week we were looking at some stocks that we liked in the long term, Citibank, MasterCard. The volatility in markets are creating trading revenues for the big banks, and instead of buying the stock, we sold put options on them. So an at-the-money $45 put on Citibank for 6 months, we got paid 20%. So in a flat market, we make 20%. In a rising market, we only make 20%, which is the downside, but we've probably got 6 to 10 weeks ahead of us of news getting worse on the virus. So we're trying to look at the horizon, find companies we want to own, and instead of buying them right now, getting paid a big premium to sell the puts. If things get worse, those get put on us at better entry prices.
You think we may already be in a global recession at this point?
I think almost certainly we're in a European recession. It looks like the U.S. is probably on the cusp of a recession, and we'll go into one in Q2 if we're not there already. These are sharp hits to economic growth. You've seen what's happened in China, and China's done a great job containing this, but 20% slowdowns in industrial production, sales, all of these things are going to be hit. I don't think this is a long-term thing, though. I think it's more like 9/11 than 2008. If we get central bank policy that we've done to provide liquidity, I don't think there's a run on the banks. And that's the thing that creates market turmoil, when you don't have faith in counterparties, if companies don't lend to each other for accounts receivables, things like that. I think the Fed measures don't do anything for the virus, won't do anything for the economy, but I think they might shore up some confidence there, and that'll keep it more like a 9/11, a sharp hit to the economy, than 2008, which was a little bit long and extended, and you could plausibly see the end of the financial system in 2008. I think with measures in place right now, we're going to get a vaccine eventually. There's improvements in treatments all the time. And even if the virus is endemic in society, that we never completely get rid of it, there will be some herd immunity, and people will go back to living their lives 12 months from now. But the next 3 to 6 months are the difficult months. Once you get past that, buying companies that aren't overly leveraged, I think you can make some good investments right now.
Hey, Patrick, in terms of just looking at the balance sheets of both some of the big European companies and companies here in the United States and elsewhere, how are you mapping out how they do during this time if there literally is, and I don't want to put a terminal value on it, but you can look at the automobile industry, for example, during this time in Wuhan, in China, automobile sales went down 92%. If that were to persist globally for any extended amount of time, when I say extended, forget about a month, I'm talking about a month or 2 months, this is not something that is a blip that everybody just comes back from.
Not everybody's going to come back from this. There's companies that have a lot of debt. The auto industry is a great example. There's too much capacity. Before the virus, there was too much capacity. More cars, the potential for producing cars was higher than the demand for cars. Cars are staying on the road for longer. They're better quality cars, so they're just staying on the road for longer that way as well. But that's one area that I wouldn't be buying, is the auto companies. They're looking at 0.2 times sales, but those sales are going to be decimaed.
Meaning
it's hard
the
to see a quick rebound there necessarily.
But meaning the bailout we did a decade ago of the auto companies didn't work?
Well, the problem with bailing out companies is you don't get the you don't get the contraction in supply, which is really what you want. You want to get things in equilibrium, where the capacity for producing autos is in line with the demand for autos. And if demand shoots up, then new capacity is put in place. And when you bail out companies, the unintended consequence is you create zombie companies almost. And the auto industry has got a lot of shakeout ahead of it, I think. It's not the area I'd be putting capital into right now.
But therefore, what is the ripple effect? And that's the part that, these are not discrete pieces. So if the automobile industry were to stumble in a meaningful way, that hits suppliers, therefore that hits the economy, that hits demand.
Yeah. Definitely, and that's why I say we're most likely in a recession already. And you've got the knock-on effects that aren't going to be the end of the world. You need to have stressful environments in the economy to basically make sure capital is going to the things that are going to drive new economic growth, not subsidizing coal, not subsidizing auto companies that are great for manufacturing jobs in the short term, but that's really not what you want to drive future economic growth. So I think policies should be designed to make sure the consumer has access to everything that they need. I think helicopter money is the inevitable conclusion of this virus. We were probably going that way in Europe anyway, where there was no inflation to speak of. It couldn't be generated. Government transfers direct to consumers will probably be needed. And I think the countries that roll that out first will be the winners. And if we learned anything 2008, countries that go quick and do things rapidly, which is what the Fed's trying to do, I think that's where you get the best response and the best outcome from markets. If you do things gradually, it's not as effectual.
Patrick, thank you for your time today.
Drastic measures are being taken in a lot of places, but countries are racing to contain this COVID-19 spread. And in Europe, Germany says it's closing all of its borders. Spain declaring a state of emergency, and the death toll in Italy, the largest hotspot outside of Greater China, surged past 1,800. Let's get out to Steve Sedgwick, standing by at London's Heathrow Airport, where travel restrictions and increased screenings are just part of the story. Hey, Steve.
Yeah, very good morning to everyone. Look, let me make this story very visual. I'm going to step out of the shot and just describe what I'm seeing this morning. You're looking at the United Airlines planes, one of the big three US carriers, along with American and Delta as well. And what I'm seeing is a lot of taxiing of planes basically leaving London Heathrow, possibly for the last time in a long while as well, because we know the big US carriers, in line with everyone else, are cutting capacity left, right and centre. Delta, we know, have announced in the last 48 hours they're cutting 40% of their flights, grounding 300 planes. American Airlines cutting 75% of international flights. And United, who you can see behind me, cutting 50% of flights over the next 2 months. Already in the first 2 weeks of March, they carried 1 million less passengers, and they've cut $1.5 billion worth of revenue. Let me just explain to you why Heathrow is such an important airport as well. You guys know this as well. The routes between JFK in New York and Heathrow are the most lucrative on the planet. British Airways alone has $1 billion route there, $1.2 billion, the route from JFK to Heathrow as well, plus the routes to Newark, plus the flights from south of here, from Gatwick into JFK and elsewhere as well. So these are really important money-spinning routes, and they are just disappearing before the airline's eyes as well. In fact, Steve Cruise, the CEO of British Airways, has talked over the weekend in a memo to employees about the existential crisis that BA is going through, and that there will be inevitable job cuts and huge amounts of financial losses. Virgin Atlantic, another one of the big flyers who do that very lucrative North Atlantic route as well. Well, their CEO, Shay Vyas, has talked about the need for the British government to support the British Airlines to the tune of $7.5 billion. But the numbers, as we all know, are quite extraordinary. The IATA group has said it could cost the industry in revenues so far $113 billion this year. I think that figure is already out of date. Back to you all.
All right, Steve, thanks. Among the hardest hit industries, cruise lines and leisure. Let's bring in Wedbush Securities analyst James Hardiman. Did you revise numbers over the weekend? Again, James, as it becomes clear how that this may be lasting a little longer than we thought in terms of the cruise industry?
We brought our numbers down substantially last year, even before those announcements were made Friday afternoon. I think those announcements were obviously historical. They were unprecedented. They were hugely impactful, but I think they were ultimately inevitable going back some time now.
So what does the future look like?
How do you see it playing out in terms of financing, in terms of business coming back, in terms of whether these companies actually survive and how much would be needed, how much help is going to be necessary for these companies to survive? And it's a big. I didn't realize how much it does add to the leisure industry in a big way in around the world. Really, it's a huge industry. Is it coming back?
I mean, it's the million-dollar question, and in many instances, the multi-billion-dollar question. I still talk to people that look at this and say, well, in a few months, hopefully things will be back to normal. I think that's a fantasy. I think eventually people will go back to work. They'll go back to school, within months here. But if I think about all of the activities that constitute normality, I think the cruise industry is last in terms of what's going to be even, call it 75% of normal. I think you're looking at least a year out. Now, the good news is these companies are extremely well capitalized. And I think they have, by the math that we do, anywhere from $1.5 billion to $3-4+ billion of sort of dry powder in the form of revolving credit facilities. The math is obviously difficult to do based on the various scenarios. I think they have at least a year of dry powder available to them, probably more like 1 to 2 years. But I do think it's going to be a long time before we return to normal.
James, the people who think that we are returning to normal, who you talk to, do they all happen to work in the cruise industry?
Well, I think even amongst cruise industry participants, that reality is slowly dawning on people. And I think the cruise companies in particular, the management teams there, are doing everything that they can to preserve capital at this point. That's the name of the game. They all did the right thing in terms of suspending cruise ships on Friday. It may have been a little bit late, but nonetheless, I think you've seen a number of steps put into place. Both Norwegian and Royal increased their revolvers by upwards of $500 million last week. I think you're going to see more moves like that as we move forward.
Because it's purely leisure. The airline industry that would need a bailout. There's just no way around it. The cruise industry, you'd have to argue whether you bail out a leisure. And luckily, as you say, James, they're pretty well capitalized. And, I guess their fixed costs wouldn't be quite as much either because nobody's sailing right now, James, right? So.
Correct. And I think that's underappreciated. The fact that it's explicit now that these cruises are not going to be setting sail anytime soon. That really does allow them to scale back on the cost side of things. It probably doesn't hurt either that the president over the weekend and even on Friday, there's this embrace of the cruise industry to some degree. What that looks like is anybody's guess.
James, just to understand, what would be the run rate? Meaning, if you had to do a terminal value on zero demand for, call it 12 months, and you didn't operate the boats at all, the ships, what would happen?
It's a tough question, and it's a question that I think everybody is trying to do that math. I think first up is Carnival, who's actually going to report earnings next week, the 25th, so maybe the week after. Is that next week? Either way, that is going to be the million-dollar question for these companies. What is their staying power? Again, I think they can probably last for a year to two.
Are they going to report earnings? A lot of that depends. Are they going to report earnings then?
I would think so.
I would hope
so.
It'll still be a plus number. Okay. All right.
Is the earnings going to be positive?
Yeah.
Are they going to report earnings? You said they're going to report. Are they going to report earnings, or it's unclear?
They're going to report
something.
Their first quarter, which ended in February, they'll probably make money.
Okay.
But I think the guidance near term is probably going to be for negative earnings.
James, you keep painting them all with one brush. Does anybody stand out amongst the others as being particularly well capitalized or particularly poorly capitalized?
Certainly if you look at Norwegian, they're the smallest. They have the smallest balance sheet. They have, from a leverage standpoint, the most leverage. So that's one way to think about it. The other way to think about it is Carnival, who is in fact the biggest, has been hardest hit from a brand perspective, right? It's their Princess brand that had the very specific outbreaks of coronavirus on two of their ships. So I think as people think about booking far into the future, I've got to think that Princess is going to have an impairment from a long-term perspective.
All right, James Hardiman, thank you very much this morning. We appreciate it.
Thanks for having me.
Coming up, continuing coverage of the global market sell-off. U.S. equity futures hit limit down yesterday afternoon, like at 6 o'clock, when the futures started trading down about 5%, which is where they're locked. So we're once again going to watch the ETFs that track the major indices, and they're down, as you can see there, about 9% on the Dow and the S&P, 8 and change on the NASDAQ. Stay tuned. You're watching Squawk Box on CNBC.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Open and secure public cloud for business. It can manage all your apps and data anywhere. So it can help take on anything from rebooking flights on the fly to restocking shelves on demand without getting in your way.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With ShipSkis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, ShipSkis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. ShipSkis, your skis delivered.
Read. Read yourself past the junk, past the hashtags and the troll armies, the partisan pandering, past all the social media that's making your head feel like, past the gossip mags and millions of stories uploaded each day. Read yourself past the algorithms, because no one ever did anything big by reading small. Read yourself better.
It's time for a special announcement from Four Seasons Sunrooms and Windows. Transform your home and change your life with a Four Seasons sunroom. And watch this announcement until the very end for a special code for exclusive additional savings. And now it's time for Four Seasons. It's time for family gatherings, to stretch imaginations, to get together or find some time alone. It's time for a Four Seasons sunroom. And right now, Four Seasons has special offers that let you have it all for less money than you thought. With no money down and no interest for 12 full months. Call Four Seasons and get your free quote and information today. Thanks for watching. Now call the number on your screen and mention the special code TIME and receive exclusive additional savings on your new sunroom. Four Seasons. It's time.
U.S. equity futures hit limit down after dropping 5%, so we're once again going to watch the ETFs that track the major indices after the opening bell on Wall Street. Here levels to watch today on the S&P. If these numbers are breached, circuit breakers kick in, halting trading for a period of time. Last night, yesterday, the Fed took emergency actions, cutting its benchmark interest rate by 1% to near zero. It also announced other moves in an attempt to stabilize markets, including some QE, $700 billion in Treasury and mortgage-backed securities. The Fed and 5 other central banks are also activating swap lines. And the goal here is to calm disruptions in overseas dollar funding markets. And you're seeing some dislocation, but some of the angst in those markets has been alleviated to some extent, and Steve has been talking about that, so we don't need that at this point.
If you are watching the trading that we saw overnight in Asia and then the active trading that's taking place right now in Europe, you see red arrows pretty much everywhere. Team coverage of all of these angles this morning's market action. Eunice Yoon is in Beijing. Eamon Javers is in Washington. And Eamon, let's start with you. President Trump and his administration yesterday working to instill a sense of calm as this outbreak escalates. What's the latest?
Yeah, good morning, Becky. We got some news from the CDC last night, the Centers for Disease Control, saying that they want all Americans to cancel or postpone any gatherings of more than 50 people for the next 8 weeks. We also got some new information from the National Security Council last night, which put out a tweet to sort of counteract some of what they say is fake news that's out there. They say text message rumors of a national quarantine are fake. There is no national lockdown. CDC Gov has and will continue to post the latest guidance on COVID-19. So that from the National Security Council last night. Meanwhile, as you say, the president and his aides trying to calm fears last night and to stem some of that panic buying that we've seen. Here's what the president had to say last night at the White House.
You don't have to buy so much. Take it easy. Just relax. People are going in and they're buying more. I remember, I guess during the conversation, Doug of Walmart said that they're buying more than they buy at Christmas. Relax. We're doing great. It all will pass.
And Becky, we're expecting a new news conference from the coronavirus task force at the White House today at 10:30 in the morning. Officials yesterday were hinting at new announcements to come this morning. We'll wait and see what those are at 10:30 East Coast time. Becky, back over to you.
Eamon, thank you.
Thank you. And meantime, I want to get to Eunice Yoon, who's in Beijing. Eunice, new data out of China overnight showing the economic impact of the virus, including figures showing industrial output contracted at its sharpest level on record. And as you can imagine, the rest of the world is looking to China to see if that will become a model for the rest of the world.
Exactly, and I don't think it's a very good omen for the rest of the world. China, because of the epidemic, posted its a record low consumption as well as production, and then record high unemployment. So in the first 2 months of the year, industrial production shrank 13.5%, retail sales dropped more than 20%, FAI fell nearly 25%, and urban unemployment topped 6%. Now, most analysts expect that GDP for the first quarter is going to stall or even contract. And if you look at the numbers a little bit closer, the retail sales figures got hammered in terms of the restaurant industry. It was completely down by 43%. Property sales dropped by 40%. Online sales were a bright spot because people were ordering nearly everything in. Now, the National Statistics Bureau has said that it believes very strongly that the sensitive unemployment rate is going to recover in the second half of the year. Most analysts now believe that the policymakers are going to be doing even more to try to stabilize the economy. Also, a big risk that they see is global demand and a sudden halt overseas because of the coronavirus spread. And Beijing has also indicated that it is very concerned about a reintroduction of infections into China. In fact, for anybody who's interested in coming to Beijing, the Chinese capital now says that every single overseas traveler has to undergo a 14-day quarantine at government facilities and at your own expense.
Talk about that in terms of reinfection and some of the data that you guys are seeing right now in China.
I'm sorry, I didn't catch that first part of your question.
If you could just speak to the data you're seeing about the possibility of either reinfection or what you're seeing in terms of the daily numbers. Obviously, they look positive, or at least we've thought they looked positive. But again, to the extent that the rest of the world is now trying to look to the Chinese experience as a model for what may or may not come here.
Right. Well, in terms of the infections, the numbers have been dropping significantly to only a handful every single day for the past several days. And that's something that the Chinese have been proud of. However, what they've also been noticing is that of the numbers that they do have of the infections, more and more are coming from overseas. And that's why you saw such a clampdown from the Chinese capital on Sunday when they said that they there are very few exceptions for overseas travelers now who will be allowed to come into the capital without undergoing this mandatory 14-day quarantine at government facilities.
Right. And then the other question I was going to ask is, you're talking about unemployment and some of this new data. In terms of just day-to-day demand, what you're seeing out there, small businesses that tried to survive during this period, again, as a model elsewhere, obviously the demand shock is going to be even greater now because the demand issue is going to be even larger given what's happening here in the United States and now across Europe.
Yeah, there definitely is a demand shock. There are a lot of businesses, though, that are trying to reopen. But again, it's, kind of comes in starts and fits. For the most part, a lot of businesses in the restaurant industry, for example, have been trying to lure people back into the restaurants with different types of deals, saying that they're doing social distancing, keeping people apart. But then you also have situations like, for example, my dry cleaners. I'm waiting for the dry cleaners to open up. They haven't actually arrived because they haven't been allowed in the city. And they're migrant workers. And from what I understand, they might be coming back sometime in late March or April. So, it's really hard to know because the government is obviously trying to push things to reopen. But at the same time, because of all these restrictions, it's still very difficult to see when the recovery is going to happen.
Okay, Eunice Yoon, you're doing marvelous work over there, and we're going to talk to you, I know, a lot more later today. In the meantime, the world's major central banks taking coordinated action to ensure money keeps flowing as the coronavirus outbreak sparks a rush for the U.S. dollar. The Fed, Bank of Japan, ECB, BOE, Bank of Canada, and Swiss national banks will tap swap lines used during the financial crisis. The BOJ is also expanding its purchase of ETFs and corporate bonds in an effort to stabilize markets there. Joining us right now is Boris Losberg. He's Managing Director of FX Strategy at BK Asset Management, also a CNBC contributor. Boris, we haven't seen you in quite some time. I'm worried that now we're seeing you means that we are in it.
I feel like, it's the end of the world and I'm on TV as always, yeah.
What are you thinking this morning, Boris?
So the problem, I think, is that this is war, and as usual, the generals are fighting the last battle. This is not a financial crisis. This is a consumer and a small, medium enterprise crisis. And all the prescriptions we're seeing so far are absolutely wrong. It doesn't matter that the Fed added $1 trillion of its bank reserves yesterday. As you see, the markets reacted very negatively because the problem now is to alleviate the consumer. And you have to do some very, very crazy policies that we couldn't even possibly imagine 2 weeks ago. Couple of examples that are out of the box thinking. We literally need to do probably, as everybody's talking about, helicopter money, $1,000 a week for maybe 6 to 8 weeks to every tax-paying worker in the U.S. Because the other thing you need to do is a national quarantine. If you want to contain the virus, we are going to have to go to a national quarantine. We're going to have to go to some kind of a martial law situation where only the first responders and most important people are going to be able to work. And if you don't do any of those things, you're going to have a much worse, much more protracted problem that's going to be.
Boris, I'll give you a different one. I understand where you're going with this. If you give $1,000 to everybody, it's not clear that you don't want them going out the door and going to spend it is the problem. I would be thinking of a national bridge loan. If I told you that we were going to provide a national bridge loan, interest-free, for 3 months to every corporation in America, small business, large business, what have you, pay it back over, 2 to 5 years, I think that the whole world would be a different place. It would cost us a small fortune.
Here's the problem, Andrew. The problem is that it's not TARP where you have 8 big banks with a phalanx of $1 million lawyers that can know how to apply to the bureaucracy. The problem is anytime you create any kind of situation like that, you're going to have a bureaucracy. Right now, no Joe Donuts, no Joe McDonald's is going to be able to apply for any of those funds and actually find relief if you create a program. You literally need to provide money so they can pay rent and pay food. Otherwise, you're going to have problems going all the way down the line as a domino effect. Secondly, and this is the other component I think is going to be crazy, you're going to have to suspend credit card payments for 3 months, period. And then perhaps even make credit card payments at 0 for 12 months. This is the kind of interest rate relief we really need, not the kind of interest rate relief that the Fed is doing. Fed funds rate at 0 means nothing.
Is that the kind of thing, though, that would have to come from Treasury? Is that the kind of thing that the Fed could support the banks doing on the credit card side?
The Fed last night said they cannot do anything for the consumer or for the SME. Powell literally said that on the call because they don't have the jurisdiction. It has to come from Congress. It has to come from the executive branch. It has to be done very, very quickly. It's a completely different situation, and the Fed is completely incapable of dealing because they don't have the tools to deal with that situation. They're doing the best they can for the markets. Now, finally, coming to the markets, the other possibility, which I think nobody's going to like to hear, is we may have to, if the markets keep falling down, we we may have to just create a pause in the markets for a week to get them to stop trading, simply because if you're going to mark everything
Boris,
to the market at this point,
that. You're
assets...
not the first person who's mentioned this, but I think it's a little crazy.
Yeah.
You start closing the markets like that. I mean, I've heard about this with people I've spoken with on the phone, seen a couple other places where people have potentially talked about this.
Right.
But if you close the markets for the week, what does that do for confidence?
Nothing, but the confidence is shot already. The bigger problem is, what I'm concerned about is if we go mark to the market and it creates covenants that trigger a whole bunch of margin calls, you literally basically bankrupt everybody before you have a chance for a breather.
Why would that be different a week from now? What would happen?
The idea is, if you suspend the markets and you create this massive helicopter money program, and everybody just has a breathing space and know that they, for the next 3 months, they have money in the bank that they can pay their rent, they can pay their food, that creates the confidence in the market to then open it back up and maybe have a vicious rally. It all has to be together. Otherwise, if you do this hodgepodge situation,
so Boris, the problem as I see it now is we are literally, if you're an investor out there, hopefully trading, let's say, if you're an investor trying to trade for the short term rather than long term, right. Look, 5 years from now, I hope and imagine we will be in a much different place. However,
100%.
It seems to me, if you're trading in the short term, you're effectively now betting on government policy. This is no longer about much else. Government policy and maybe the ability of our drug companies and manufacturers to come up with a vaccine or some kind of drug that mitigates the symptoms and or what you think happens to the spread of this thing.
Yeah, and absolutely. And first of all, if you're trading short term, I've got to warn everybody, it is brutal even if you're on the short side. We have the biggest stock market rallies happen during bear markets. I'm old enough to live through 87, and people forget that 87 was the single greatest stock market rally ever. It started at 10 o'clock in the morning, went to 2 o'clock in the afternoon. We were up 10.5% from the lows, and then, of course, we died. So the point is that I think sort of lots of speculative flows on the short side could be just as dangerous as speculative flows to the long side. If you're an investor right now, the only safe harbor that I can think of is relative strength trades. I think, for example, Microsoft against the rest of the market or Microsoft against Apple is probably a great trade simply because those kind of companies with lots of strong cash flow and virtual products probably will have a much better way to survive than Apple, which is basically a hardware company, and I don't think anybody's going to be buying $2,000 Apples or $500 AirPods for a long time. So, yes, I think if you're a long-term investor, you just kind of either sit still. If you have excess capital, add to it. If you're a speculator, you have to be super, super careful in these markets.
Boris, it is good to see you under could be better circumstances.
Trying times.
When there's a crisis, there's Boris. So we'll, I imagine we'll be seeing a lot.
Let's move on. Airports across the country thrown into chaos this weekend as workers tried to implement the Trump administration's new health screening procedures. These were the scenes at Chicago's O'Hare and Dallas-Fort Worth international airports with long lines of travelers trying to get through customs. Meanwhile, United Airlines has announced it's slashing its capacity by 50% for the next 2 months in a bid for some cost savings amid this crisis. Let's bring in Phil LeBeau. Phil is in Chicago, looking okay this morning. Hey, Phil.
Hey, Joe, it's a far more dire situation for the airlines. And let me tell you, we had a conversation with leadership from United Airlines last night. The tenor and tone has changed dramatically over a week and a half when they first announced capacity cuts. And at that time, it was 20%. Now they're saying we're cutting our capacity at least through April and May by 50%. Give you some perspective on how bad things are. In the first 2 weeks of March, the airline flew 1 million fewer passengers than it did during the first 2 weeks last year. In a note just to explain how bad the situation is, look at this quote from CEO Oscar Munoz and the president of United, Scott Kirby. They say, the bad news is that it's getting worse. We expect both the number of customers and revenue to decline sharply in the days and weeks ahead. That's the story with United. It's the same bad news for American Airlines. Really, it's across the board for all the airlines. American on Saturday cutting international capacity by 75%. It's cutting its domestic capacity by 20%. 90% of the company's long-haul airplanes, we're talking about the wide bodies that they would fly, let's say, from the U.S. over to Europe or to Asia. They've got 149 of them. they're parking 135. That's some indication of just how bad the situation is for American. Delta, not much better. The company is suspending its service from Delta to London Heathrow and from JFK to Dublin. Of course, we know that the UK and Ireland travel restrictions kick in at midnight tonight. And you mentioned the lines at O'Hare. Now, yesterday during the coronavirus task force press conference, if you want to call it that, at the White House, they said that they are adding more staffing, not only at O'Hare, but at all of the airports. The Department of Homeland Security says that additional staff should help alleviate the delays. But yesterday there were reports that it was still an hour to 2 hours at various airports that are handling those international flights. Finally, guys, as you take a look at the airline index, keep this in mind. You've got a number of states that are now saying, shut down the dining in restaurants. We don't want people more than 100 getting together, more than 50 getting together. The question becomes, what happens with airplanes? Because you've got anywhere from 100 to 200 to 250 people who are on a plane. So far, we're not hearing that a domestic travel ban is going to be put in place. But increasingly, as they are looking to limit the number of people getting together, that's going to be in focus.
Can we just talk about that again? And I hate to use the word terminal value, but let's just talk about if there were to be a temporary shutdown of flying for any period of time. Right. What you look at the balance sheet of the different airlines. Yep. How long can they effectively operate before they need help?
Not long.
When you say not long,
because revenue is already
weeks, months. What are we talking about here?
That question, that specific question, Andrew, was put to an executive from United Airlines last night on a conference call that I and a number of other reporters were on, and the executive said, "Look, I'm not going to put a timeline on it, but I can tell you from talking with various executives at a number of the airlines, they are hemorrhaging cash. They need to do something. A number of them have already taken out new lines of credit, new loans, but they are hemorrhaging cash. So if you shut down the airlines completely, which is not out of the question,
right?
But if you shut them down completely, Andrew, then what happens? You've got no revenue coming in. You've still got the equipment certificates.
What I'm trying to understand is if this goes on, and I think the most experts are looking at this as a minimum of a 2-month situation, if not longer. But let's say there was an acute period where you decided that for 2 or 3 or 4 weeks that the airlines were not going to operate. What the genuine long-term economic damage would be to those airlines?
It's quick, and that's the reason they're all looking to Washington for some type of relief. You can call it a bailout, do whatever you want, whatever name you want to use for it, but they're going to need some relief because they're hemorrhaging cash.
Okay.
We'll talk to you hopefully later in the show. A lot of other questions about what this means for Boeing and their employees, too. But let's save that for a little later this morning.
You bet.
Meantime, I want to talk retail. A growing number of major retailers also taking action over the weekend, announcing they are now shutting down their stores or reducing hours in response to the growing virus outbreak. Apple, Nike, Under Armour, just a couple of the names that are closing up shop for now. Courtney Reagan joins us with the latest. Courtney.
So it is the new normal in a country where officials are asking us to limit our gatherings and they're encouraging social distancing, imposing curfews. So the list is going to continue to change. But at least among the retailers that are closed, this is not an exclusive list, an exhaustive list, but most of these retailers are closed for at least 2 weeks. Apple, Nike, Under Armour, Lululemon, Columbia, Patagonia, REI, Abercrombie, Urban Outfitters, plus a number of smaller names like Warby Parker, Everlane, Allbirds, Glossier, and Away. The good news is employees, they'll continue to get paid while stores are closed. So that is good for a number of the workers. Other retailers are shortening their hours. Now, this is mainly grocery stores that sell essential items, and they're doing this in order to restock and clean their stores so that they can continue to serve American consumers. And these include Walmart and its neighborhood markets, as well as Sam's Clubs, Publix, Stop and Shop, Natural Grocers, Wegmans, Trader Joe's, and some Kroger stores. Gap, Old Navy, Banana Republic, they're also operating under reduced hours. Now, Jefferies analyst Randall Koenig estimates that mall traffic will be down up to 75% in coming weeks. Now, this is for malls that are open. We know some names like King of Prussia are closed entirely. Jefferies says that mall names without momentum, think of Victoria's Secret, and those that don't translate well online, like Bath & Body Works, lotions, and candles, those are going to be tougher hit. Winners will include, of course, those selling groceries and names like Planet Fitness, because memberships in large part are already paid. Back over to you.
Hey, before you go, Courtney, one of the things we heard from the president yesterday was, don't hoard items.
Yes.
Things are going to be restocked in the stores. Not to worry. Can you speak to the issue of supply chain? And it's something I wish I had spoken more to Eunice about, because while I think the supply chain may be okay right now, the question, of course, is what it looks like in a week or two or three from now.
Exactly, Andrew. So remember, when this coronavirus first started percolating overseas in China, where so much manufacturing is done, the first concern was supply chain. What happens to where the goods are being made in those factories? That is slowly starting to come back online. The retailers that I have spoken to have tried very much to assure me, to be able to assure the public, that there is not a shortage of goods. Yes, you might be seeing empty shelves, but that's because there's only so many toilet paper rolls that they get in at any given time. But the supply chain is moving forward. And as a matter of fact, the two big lobby firms put out a joint statement yesterday urging customers not to hoard, saying they are working with the supply chains and government officials to make sure that all essentials will be in stock for Americans.
And what was the experience when it comes to things by mail? I'm thinking of Amazon or all the e-commerce orders that are taking place right now, given that so many of these stores are closed, and if there is going to be disruption or not along that avenue.
Yeah, so again, it's going to be a case-by-case basis, but for the most part, of a number of those retailers that we listed off earlier that have closed stores, their online operations are still operating. Now, of course, there's a very long chain that has to go into impact for that to work. You have to be able to stock the orders with employees. You have to be able to ship them. They have to be able to get delivered to your home. But for the most part, most online operations right now are still trying to maintain normalcy.
Courtney, if it's a supply chain that has nothing to do with China, I don't understand if you could connect the dots to why there would be bread shortages or ground beef or even toilet paper. I don't. Where's the disruption? Where does that come from?
I think we have to be careful with the word shortage. I totally understand what you're saying when you're seeing these photos or in person. You're seeing empty shelves.
When I go in the supermarket, it's striking. Only certain things are gone. I'm not really sure why.
Yeah, I think if you think about, look, when we've covered hurricanes before, there are certain products that people gravitate to when they think, if my life is going to be disrupted, what do I need to maintain the most normal sense of my life at home that I can? So they think bread, eggs, milk, which in some cases, does that make sense? Because it'll go bad, right, after a period of time.
Well, why
Toilet paper, I think, is one of those things that people feel like that is a basic luxury of life. And if you don't have it, then you're going to feel like things are really rough. And then it's a herd mentality, and psychology starts to play into it.
Would there be any reason that you can't get that that the meat industry closes down, or that the dairy industry closes down, or that the baking industry?
Again, I think it has to do also with employees and who is able to maintain a healthy workforce, right? So if your butcher is sick, or if those folks down the supply chain are unable to bring those products to bear, that's where I think you could have problems.
It's not just that. People are doing it because they don't want to go back in the stores, so they're buying that stuff and they're going to freeze it.
But the stores then should be there. Well, I know that at the supermarket where I am, they're getting it every day. It's just going out as quickly as it comes in.
What's about to happen here? Are there going to be more cases, and are you going to feel comfortable going to the store and assuming that the people who touched that along the way?
I think the other issue that over time, and I've been talking to CEOs at some of these companies, what they're really worried about is the social distancing that's going to be required, not just at the stores, but down the line at the folks who are actually making and manufacturing these things on the distribution lines, in the warehouses. If, in fact, employees and workers are not coming to work, or they're even, frankly, being asked not to, then it changes the whole dynamic.
Agree. Social distancing is a big problem for retail across the board, from the manufacturing all the way to the stores.
Courtney, thank you.
Thanks.
All right. CNBC will be back with more right after this.
We do it like we do it like we do it like we do it like we do it.
It's time for a special announcement from Four Seasons Sunrooms and Windows. Transform your home and change your life with a Four Seasons sunroom. And watch this announcement until the very end for a special code for exclusive additional savings. And now it's time for Four Seasons. It's time for family gatherings, to stretch imaginations, to get together or find some time alone. It's time for a Four Seasons sunroom. And right now, Four Seasons has special offers that let you have it all for less money than you thought. With no money down and no interest for 12 full months. Call Four Seasons and get your free quote and information today. Thanks for watching. Now call the number on your screen and mention the special code TIME and receive exclusive additional savings on your new sunroom. Four Seasons. It's time.
Market volatility, virus fallout. How will the Fed respond after a week of colossal sell-offs? Insight ahead of the Fed meeting. Strategies before the bell. Squawk on the Street, 9 a.m. Eastern. Watch and listen live on the CNBC app.
CNBC Select rounded up the best exclusive limited-time credit card bonus offers and promotions. The clock's ticking. Head over to cnbc.com/select before it's too late.
Love Trump or hate him, he's not why stocks are going down. They're going down because we have to stop the virus. And there's no way to do that without causing a recession. The government obviously makes mistakes, but stocks are plummeting all over the world. Watch or listen live on the CNBC app.
Breaking news, global markets selling off again. U.S. stock futures are limit down, even as the Federal Reserve slashed rates to stave off a recession in the face of the global coronavirus threat.
Life in America changing rapidly as governments at every level take drastic and unprecedented steps to try and slow the spread of the pandemic.
Major retailers, including Nike and Apple, shutting their doors for weeks. We're going to talk about the fallout for the U.S. economy. It is Monday, March 16th, 2020. The Squawk Box begins right now.
Good morning, I'm Becky Quick here at CNBC headquarters. Joe Kernan and Andrew Sorkin are live at the NASDAQ market site in Times Square. And let's start immediately with the markets this morning. U.S. equity futures hitting limit down after dropping by 5%. That just means that they can't trade any lower this morning. Those are the curbs that have been set up by the exchanges. You are going to continue to watch what's been happening with the ETFs, however, because the ETFs are not held to those same restrictions. You can see that the Dow ETF is now down by over 9%. The S&P ETF down by almost 9%. That gives you a little bit of a better idea of where the major averages would open if we were to open here. Of course, there are some circuit breakers that could kick in as well. Once actual trading starts, you have a limit of 7%. Remember, we hit that last week one day. 7% down, actually 2 days, down immediately outside of once we began trading. If we were to get down 7%, you would see a halt of trading for 15 minutes. That level today is 135 points. Level 2 would be if we were to see a 13% decline, then you would see another halt for 15 minutes. And then if there was a drop of 20%, anytime before 325, before the final 35 minutes of trading, you would see trading halted for the remainder of the day. Last night, the Fed took emergency action, cutting its benchmark interest rate by 1% to near zero. It also announced other moves in an attempt to try and stabilize markets, including buying $700 billion in Treasury and mortgage-backed securities. The Fed and 5 other central banks are also activating swap lines. The goal here is to try and calm disruptions in overseas dollar funding markets. We'll have more from Steve Leisman in just a minute.
Checking Treasuries, which had the yield had gone up above 1% on the 10-year, and we're still well above the lows that we saw in recent weeks, even after the Fed action. Let's look at there. You can see we're at just under 0.8% on the 10-year. European markets right now. Take a quick check of those, and they're about what you would expect. In fact, not as bad as the ETFs are indicating here for our markets. And then overnight in Asia, check that. See Asia down, not nearly as about half the losses we saw in Europe and less than what we're seeing here.
Right. Okay, let's walk you through what's going on right now. There are now more than 153,000 confirmed coronavirus cases globally, with more than 3,000 now in the United States. The U.S. death toll is at least 61. Cities and states are taking action to encourage social distancing. Right here in New York City, the city is closing all of its public schools It's also limiting restaurants, bars, cafes to serve only takeout and delivery. Nightclubs, movie theaters, small theater houses, and concert venues are all being ordered to close starting tomorrow at 9 a.m. local time. Retailers are also closing. Apple says it's shutting all of its stores outside of Greater China until March 27th to reduce the risk of the virus spreading. Its online store will remain open, but what's taking place in New York may soon be coming to other cities throughout the country, and the efforts to slow down the spread of this virus is going to take an economic toll. In Washington over the weekend, the House passing an emergency coronavirus aid legislation, including free testing and paid sick leave. The Senate expected to pass the bill this week. Want to get to Eamon Javers, who has been on this story all weekend. Eamon.
Yeah, good morning again, Andrew. What we're learning now from the CDC is they are asking all Americans to cancel any gathering